Welcome to Invest. We talk about investing, finance, and professional development. As the current time of 11:07 a.m. on the Eastern Time on the 9th day of 2023. Hope you guys have a great Monday so far and also a great weekend. Ethereum closed at $1,339, up about close to 4% so far. As you can see clearly on the left side of the chart, if I'm moving my heads a little bit, I feel like I'm blocking the chart a little bit. You can see across the spectrum we're relatively green as we are trying to sustain the Friday rally. But with respect to like what's really driving this, I would say it's just a collective psychological sentiment coming from investors, mainly on the retail side, knowing the fact that there has been lack of negative news in the foreseeable future, or anything confirmatory that is also, on parallelly negative, on driving any sell-off so far. And also with respect to fund managers, again, right, they're incentivized to be purchasing in the first couple of the beginning of the year to kind of start the book in just a more of an accounting perspective. So there's a lot of collective, I guess psychological and artificial type of pressure driving this rally. But with respect to the key catalysts that we need to really look out for, in addition to the job numbers that we've gotten last Friday so far, which was a relatively positive one, which also served as a supplement to the rally, nothing has really been confirmatory so far, right? We are still in the mid of a downtrend that, with respect to the rate hikes, we still need to understand the efficacies of the 375 basis point rate hikes. 150 basis point seems to be a transitional improvement so far. What's going to be the next one, right? How are we doing with the economy going forward? Are we going to be shifting on to recession going forward? Are we in the recession already? Are we going to go with another 50 basis point? Or are we going to, kind of have to take a turn to 75 basis point all over again? Right? These are all questions that we need to kind of solve and figure out, right? And also with respect to the corporate side, right? How are the earnings for Q1 gonna look like with the geopolitical tension that we're seeing, across globally, right? China with their tensions among due to the Ukraine-Russian war, the supply chain issues that seems like to be dampening, and also in Q1 we know that Chinese New Year can have direct negative correlations to supply chains dynamics. Any businesses that transact or have a relationship with suppliers out of China will technically have some negative correlations to the more of a regular activities that are happening on a month-to-month basis, right? So that's something we also need to look out for. And then other exogenous factors would be with respect to the COVID situation in China, but also in domestic level, right? It seems like there are people getting sick left and right, including my immediate family. My sister did get some symptoms during this weekend. She did take a COVID test. Seems like it was a negative one, but symptoms can arise. But in terms of like the results on the test, it can sometimes be you know, kind of a delay effect, so we don't know, and we'll see how everything will unfold. And then last but not least, the tax treatment, right? With respect to Q1, tax season is happening. It is going to be expected to happen sometimes later in the months. So how are people treating their tax write-off? How are people treating their portfolio, their capital gains tax, things like that? That will also have a negative correlations to the market. So let's take a look at the media front. You can see that with respect to the the spectrum across all the equity side of the equation are relatively positive, right? Because this is again a psychological treatment. And with respect to some news, you're also seeing it seems like collectively are relatively positive. It seems like Tesla is a buying opportunity at current levels, say Neuberger Berman analysts. And also you see just a lot of positive news. Goldman Sachs add Alibaba to conviction buy, shares can rise by more than 25%, and things like that, right? There are some like election type of scandals, like obviously George Santos seems like he's been lying about his resume, and but these are nothing directly correlated to the equity market or the crypto market. And the ultimate main catalyst in terms of a market driver is still going to be happening in the last day of January and the first day of February, with respect to, obviously, as we know, the CPI and the FOMC meeting that's happening, right? So nothing has really changed the verbiage in terms of what we've been talking about so far. So let's take a look at the technical right now together, shall we? Respect to recording time of 11:12 a.m. So we are at 1340 right now, for a 4%. You can see that we are attempting to reach to the level of 1350, which we are just a hair away from it. And with respect to, like, is it a logical level to buy right now? I would say the answer in a very simple perspective, no. We are like relatively elongated. We are at the 70 out of 70 mark. The reason we're propelling up is because we are getting a lack thereof in terms of negative news. We are reaching into a resistance level of 1350, and what we really need to do to plunge through and continue this bullish rally is to plunge through this all the way up to 1450 first, right? Which you can see clearly we have not, right? We are still $100 away. And with the elongation and the extension on the RSI's front, the apex is going to be formed momentarily. And also, this is being supported with the weekly chart, right? Very extended for a while. 1, 2, 3, 4, 5 in terms of resistance level. So, not the best level to kind of DC at the moment. The better levels was, things that we have seen before. The lower levels at 1050, the 1150, obviously, right? But in the near term, is this sustainable? I would say the answer is no. We still need to kind of come down and to realign the daily, weekly, and obviously the monthly front is already been depleted and it's just waiting for us to kind of come through. On the Bitcoin side of the equation, we are at 17,000, up 1% so far, and monthly is looking to glide. Weekly, it is looking to kind of cross down 1, 2, 3, 4 levels that is looking to kind of cross down eventually. So, but the daily, it is quite extended, right? We're 62 out of 70, which is extended level. And how much of a is it sustainable to keep going up to the next level, which is technically somewhere around like 18,000? I would say it's not, right? Because of the elongation, the extensions, we are looking for an apex. We're in the opposite side of the chart right now. So daily, weekly are negative, muting the monthly. So that means this is not the best level to get in right now. And then on the equity side, you can see that with respect to we are at close to 395 right now. We're trying to sustain the trend, but you could see that we do need to kind of cross down because of the cross section. We do need to form a death cross on a weekly. The daily, it is crossing up because of the golden cross, which was something we talked about previously already, that we need to cross up before we cross down. So golden cross is formed on daily. Weekly is still delayed, so it needs to kind of cross down before we realign on all fronts on the monthly. Okay. So it's a relatively quicker one than usual, but it is talk about the same dynamics despite this green day that we're seeing. And on top of that, remember today is a Monday, so Monday typically is a green day. Is combined with the fact that we are in the beginning of the year, again, right? So a lot of artificial slash psychological treatment that we're seeing in this rally so far, not sustainable. So definitely be cautious about this. So that's my analysis on the risk management perspective. But let me know if you have any questions, and I will check you on the next one. Take care. Bye.